Gold and crypto, a fair match between the eternal metal and digital gold. Imagine waking up in the morning, going to your bank, and the doors are closed. Not for an hour, not for a day, but indefinitely. It's March 2013 in Nicosia, Cyprus. People are standing in front of shuttered bank branches. The line doesn't move. On the glass, a sign reads, "Temporarily closed. Cash withdrawals limited." Money that felt safe in the bank yesterday is suddenly unreachable today, and on that same street, something else happens. Informal exchange points appear almost overnight. Under the table, gold coins are being traded, and for many people, Bitcoin for the very first time. Two completely different systems, one old, one new. One goal, survive a financial lockdown when the system stops working. Then and now, gold and Bitcoin today. Fast forward 20 years, and the story didn't end. It evolved. Today, central banks around the world are quietly accumulating physical gold, not because they are nostalgic, but because they understand systemic risk. At the same time, something historic happens on the other side of finance. Wall Street opens the door to spot Bitcoin ETFs. Bitcoin enters pension funds, institutional portfolios, and the traditional financial system. This isn't about choosing a winner, it's about two answers to the same question. Metal with no counterparty or code with no bank. Size and liquidity, gold versus Bitcoin. If I had to use a metaphor, gold is an ocean. Bitcoin is a fast-growing river. Gold has been here for thousands of years. You find it in Indian wedding jewelry, in central bank vaults, in private safes, and in physically backed ETFs. Its liquidity is deep, global, and tested across centuries. Bitcoin tells a different story. It started in 2009 as a small experiment and grew into a global network with a fixed supply of 21 million units reinforced by periodic halvings. Gold is deep, broad, and stable. Bitcoin is fast, continuous, and still being domesticated. Both are powerful, in very different ways. How trading works. This is where the differences become very practical. Gold trades almost around the clock. London, Zurich, New York, Shanghai, 24 hours a day, 5 days a week. In calm times and in crises, there is almost always a buyer, a seller, or a lender. Bitcoin goes one step further. It trades 24/7. No weekends, no holidays, no market close. The world can stop. The network doesn't. And then come the ETFs. For many investors, this means exposure without wallets, without private keys, just a ticker symbol and a click. A bridge between the old system and the new one.